Hey there, what's up? Sergio here with another video, and in this one we're gonna be going over the top 5 investments for 2020. Welcome back, Sergio here with another video. In this channel, we talk a lot about finances and how to make money online and offline. So if you haven't subscribed already, go ahead and do so now and hit the bell to receive notifications on my future videos. And if you want to follow me on Instagram, you can go ahead and do so at Serg Unlimited. Are you looking for the best investment possible in 2020? Are you trying to see what gives you the best return on your money? Well, in this video, that's exactly what I'm going to be talking to you about. I'm going to be going over the top 5 investments that I have found and that I currently invest in myself to get me the highest returns possible year after year. So if that's something you're interested in, go ahead and give this video a like, as it really helps me out and it helps get this video out to more people to spread this valuable information. Before I begin the video, I do want to let you know that I did take about an entire day researching this topic and putting numbers together to see what actually brings the highest returns possible at the moment, to give you guys the most solid information possible based on facts and numbers. All right, so if you wouldn't mind, go ahead and hit that like button. It really helps me out. Without further ado, let's jump into the video now. Okay, so if maybe you've saved some money and you're looking to figure out where to invest it in, this video should definitely help you out. Or also, if you're starting to make money and you want to invest as you go, little by little, this information is going to be super useful for you. All right, so we're going to be going over the top 5 investments that I have researched for you, and we're going to start with number 5 and we're going to go down to number 1, which is going to be the best one. All of this research has been done with facts of the actual history of these investments over the past few years, and I did calculations on each one of them to determine which one over time will actually bring back the highest return on investment. So what I did was I used $100,000 as an example number on each of these 5 investment types, and I calculated over a period of 20 years to see which investment type will bring back the most return on your investment. So we're going to go over them now one by one, starting from number 5, which is the investment that brought back the least amount of return, to number 1, which is the investment that brought back the highest returns on your money. So we're going to start off with number 5 being the worst investment out of all 5, and number 5 is investing into dividend stocks. So we're going to base it off of the Vanguard 500 Index Fund ETF. Now I based these figures off of the actual history that this stock has performed in the last around 10 years, which over the past 10 years has done about 10 to 14% average increase every year on the stock price, and it's also paid an average of about 1.8% dividend year after year. So these are the numbers are used after a 20-year period of reinvesting those dividends every year and the stock price increasing at about a 10% average annual increase per year. After 20 years, you're left with about $419,900 in total. So this is, out of all 5 investments, this is the one that brought back the least amount of money at the end of the 20-year period from investing $100,000. And also keep in mind that the annual returns that they pay, they're not always guaranteed. They can go up and down, as well as the price of the stock itself. But keep in mind that these estimates are based off of the actual history of the stock within the last 10 years. So it's not going to be guaranteed, but it should be pretty accurate, as long as there isn't a huge financial economic crisis within the next couple years. So now we're moving on to number 4. Number 4 is going to be gold. And the reason I put gold in here is because over the last 20 years, it's had a total increase of about 425%. That's an average of about 21.25% year after year. So if you would have invested $100,000 in gold 20 years ago, now you would have approximately around $525,000. Same thing goes from now on to 20 years from now. Let's say that the rate continues about an average of the same, about 21.25% increase year after year. You should have that same amount in 20 years. So gold is number 4 because it does have such a high increase over the last 20 years. But just keep in mind that investing in gold doesn't pay dividends. So the total increase percentage on what you invest is what you will get in the long run, unless if you invest more. So moving on to number 3. Number 3 is peer-to-peer lending. And there's a bunch of websites out there where you can invest into peer-to-peer lending. Although I just researched the main one, which is lendingclub.com. And they have an average rate of return around 9 to 12% year after year. What I like about lendingclub.com is that you can diversify your investments. You're not just investing all of your money into one loan or just a few loans. You can invest little amounts into many loans. And the other great thing about Lending Club is that they pre-qualify their borrowers so that people like you that are loaning money out on their platform don't run as high of a risk of not getting paid back, because borrowers have to have a minimum credit score of about 660 in order to be approved for borrowing funds on lendingclub.com. So lendingclub.com is on number 3 because at an annual rate of return of about 9%, remember I always like to round down, even though they state that their annual rate of return is about 12%, but they also do have fees. So after all of their fees, to be on the safe side, I use 9% annual rate of return. So after a period of about 20 years of investing $100,000 with lendingclub.com and reinvesting the profits year after year of all the loans, you're going to be at about $560,000. Putting Lending Club on top of gold. However, keep in mind that lendingclub.com has been around for a shorter period of years. So lendingclub.com, or peer-to-peer lending online, hasn't been around as long as investing in gold or the stock market, but they were founded in 2006, so they have been open for about 14 years now. So just keep that in mind. All right, so moving along. Now we're going to go ahead and move into number 2. Number 2 is investing into real estate indirectly. So there's many ways you can invest into real estate indirectly. And by indirectly, I mean not actually owning and maintaining real estate properties yourself. You can invest into things like REITs, real estate investment trusts. There's also a platform called Fundrise, which they take care of all the investment for you. And Fundrise has been around since about 2010. So they have about 10 years now. And the other way you can indirectly invest into real estate is by becoming a hard money loan lender yourself. And hard money lenders usually charge right now around 10 to 12% for loans. So each of these indirect ways of investing into real estate have their differences. REITs are pretty much companies in the stock market that you can invest in, that they invest into real estate projects. So this is probably like the most indirect way of investing into real estate. And when investing into REITs, your rate of return is most likely going to be a little bit less than if you were to invest into a company like Fundrise or becoming a hard money lender yourself. So companies like Fundrise over the past few years have had an annual rate of return on your investment of about 12%, but they do have a couple fees. So after their fees, you should actually get about a 10% return on your investment year after year. And this is very similar to becoming a hard money lender yourself. So year after year, after reinvesting your profits on your investments with Fundrise or as a hard money lender, after a 20-year period, you should have about $672,000 if what you've been getting is about a 10% rate of return. However, that number will be slightly higher at about $964,000 if your rate of return every year is 12%. So pretty big difference there. You can see how just 1% of interest year after year makes a huge difference after a 20-year period. So another thing to keep in mind, the real estate market does go up and down as well, and interest rates do as well. So these interest rates can go even lower for hard money loans, or they can go even higher if regular interest rates increase over the next few years. But since these investments are in real estate, it does go up and down, but it's something that is very reliable. I would say that these are investments that are a little bit on the safer side. And they're great because you don't have to be directly involved with real estate. You don't have to deal with tenants or collecting rent or maintenance on properties yourself or having a crew to help you take care of all of these responsibilities as a landlord. But the major difference is that you're going to be missing out on the annual increase of value of the properties, which is something that you can enjoy if you are the real estate owner yourself. And that's where we jump to number 1, which is properly investing into real estate yourself. So with properly investing into real estate yourself in about a 20-year period, if you do it the right way, you will have approximately around $1,690,000. So as you can can see, this is number one because the return on investment is much higher than all of the previous methods that I just mentioned. And I'm gonna go over with you real quick how I came to this number. So over the last 20 years, real estate values have increased over time at about a 5% year after year. So it did take me quite a few hours to come up with all these numbers, but what I did was I started off with an initial $100,000 investment. Year number one, we bought one property with about a 30% down payment. So that's about $30,000 plus about $3,000 for closing costs. So let's say that's $33,000. So the first year we have one property that we purchased and we're collecting rent on it. Then the second year we go ahead and buy another property. So we still have some money left from the $100,000 to then the third year buy another property. So now we have 3 properties collecting rent and raising in property values year after year at a 5%. So after a few years of this, you're gonna have enough money back in to where you can reinvest those profits from the rental properties to continue buying more properties. And I'm not gonna break the entire thing down in this video. That's gonna be for the next video. But over that course of 20 years, by reinvesting the profits on the rentals, we're able to buy about 8 different properties. And by year 20, the first one was obviously paid off. I did come to these numbers with getting 20-year financing on each of the properties and deducting the amount left on the loans after the 20-year period. Some properties owed less than others, but after calculating all of the numbers, there was about $1,600,000 in equity and property values combined. Plus there was extra cash left over, about $60,000, plus the rental income, which came out to about $58,000 per month at that time, while still owing money and financing the majority of the properties. So like I said, I am going to upload a video pretty soon breaking down how to properly invest into real estate. So just keep in mind that investing into real estate is also great because you can get financing for buying properties and use that money that you're receiving while it's being rented to save up and buy more properties in the future. The more and more rental properties you have over time will significantly increase your year-to-year profits to be able to reinvest back into real estate. So remember, these numbers were based on real historic numbers from the past 20 years. Once again, go ahead and give this video a like if you got some value out of it, and stay tuned for the next video. Go ahead and comment down below what your favorite investment is at the moment. I would love to find out. And also keep in mind that these are investments that you can make once you have money saved up, or that you can invest into little by little over time. But to actually make these investments, you do have to have some kind of money coming in. So that's why never forget that cash flow is king. So obviously the best investment will always be a business or something active that is actually bringing you money back on a regular basis. But these are more passive investments that you can make once you have some money saved up, so that you can get passive income and increase your net worth over time. All right, everyone, so that is it for this video. And like I said, stay tuned for the next video. I'm going to break down the proper way to invest in real estate so that you can see the power of reinvesting your profits back into real estate and values increasing over time. All right, everyone, that's it for this one. I will catch you in the next video. And as always, peace.